What's up, everyone? It's Cowdy with Money Investing. So welcome on board. So thank you everybody for joining in. I'm not sure why the thumbnail doesn't update. I don't know why it still says like dropping or whatever like for the markets. But anyway, so thank you so much for joining in. Let me know in the live chat if you guys can see me, if you guys can hear me without any issues, and we should be all set with all the technical problems. So let me know in the live chat if you guys can see me, hear me. That's all I'm going to be asking for. So thank you so much for joining in. I really appreciate you guys' time and your support. And here we are with the markets pretty looking okay, like flat, somewhat green. But for the most part, we are starting to pull back a little bit on some of those stocks. So hearing okay, so that's great. Thank you so much. Perfect. All right, so you'll notice the Dow Jones is down about 8 basis points. We got the SPY pretty much flat, and we've got the NASDAQ pretty much flat as well, up over 3 basis points, with the VIX getting a little bit of a push higher, up over 73 basis points. With cryptos, Bitcoin slightly flat, just trading over $32,000, and Ethereum just under $2,000, hitting some type of a resistance. Let's take a quick look at some of the stocks here. So we're going to be talking about Tesla, Apple. We'll talk about a lot of different stocks. So and Palantir as well. We'll talk about Neo, Palantir. So Neo pretty much flat. It was up pre-market. I think it was up over 1%. So we were trading as 47.45, but then we saw a little bit of a pullback over 2.2% pre-market here. Before seeing before seeing that pullback here down all the way. Talking about Tesla. Tesla also coming down, so we were trading at 658, so we did pull back about 61 basis points. Quick look on Palantir. Palantir is also coming down from highs of 22.74. We dropped about 1%, trading as low as 22.56 right now, and up just about 18 basis points. All right, so let's take a quick look on. So Lil, thank you so much for that. I really appreciate your comment. Thank you for joining in, and let me know if there's any stocks you'd like me to look into. I'm more than happy to take a look at it from a technical analysis standpoint. And then fundamentals are also included on TradingView. We'll see if we can find anything for any stocks, but thank you so much for that. I really appreciate it. All right, what do you guys think? Green or red for the markets? Are we gonna see a push higher or a pullback for the markets today? So Nvidia, yes, Nvidia I'll go over. So Nvidia right now, let's take a quick look. It's up over 1.5% pre-market. This thing continues to push higher, and right now I feel like there's a high probability that we see a push higher all the way to 208, 207, considering that we got a perfect bounce back higher from that 50 exponential moving average, so that 50 EMA. So Nvidia, I personally believe that we are going to potentially see highs of $208, but just know that if you're getting in on Nvidia stock, you're paying a little bit of a premium at these levels, right? Just based on the price to earnings, price to sales ratios. I don't know if TradingView's updated those. So it has. So price to earnings 88 and price to sales 24. So you're paying a little bit of a premium for this stock, considering that the market cap now sits at almost $500 billion. So Nvidia, if you want to start a new small position at these prices, that's completely fine. It's, of course, it's your decision, but just be mindful that we could see a much bigger pullback just based on the valuations that are sitting for Nvidia stock. But from a technical standpoint, we got a perfect bounce back higher from that 50 EMA. So it wouldn't be surprising to me if you do get a retest back up to 208, 210 levels. All right, let's take a quick look at XPeng. So we got about 3 minutes left for the markets to open here. So XPeng had a really strong day yesterday. It perfectly bounced off of that 50 exponential moving average and the support that we had identified at $37. And since then, we've actually moved up over 18%. So next resistance is at $46. That's the level I would watch at 46.22 for XPeng, and of course supports is aligned with those moving averages at $37.40 for XPeng stock. All right, so the markets are going to be opening in about 2 minutes and 30 seconds. We're going to keep a close eye on these stocks, and let's just go ahead and build up our 4 split screen here. So we're going to break down 4 different charts we're going to keep a close eye on, and then do some technical analysis on the side as well. for a lot of different companies. So next week is going to be the craziest week in the stock market. Now I know that every week is perhaps a crazy week, but we've seen somewhat kind of like non-eventful weeks in the last couple of weeks, but next week is actually going to be very, very, very important for the markets, right? Not only we have a big tech earnings, that we've got Apple, Amazon, AMD, we've got Tesla reporting, so PayPal, we've got a lot of companies reporting their earnings, but we also have the FOMC meeting on July 27th, and of course Jerome Powell is going to be talking about the interest rates and what that decision is going to look like moving forward from the committee, right? He's also going to be talking about tapering, and of course they're going to be addressing inflation, which has been running incredibly high over the last couple months, and we're now sitting well over 5.4%. But if you look at the 10-year average, we're sitting very aligned with where we were back in 2007, 2008. So very, very important week. We could see some volatility next week as well, and wouldn't be surprising to me if we get another spike from the VIX and basically drop down for the S&P and the NASDAQ as well. So enjoyed your video, basics of trading. So yeah, I put out a very beginner friendly tutorial video. I actually created a whole presentation that I'm going to make available for all of our Patreon members if you don't want to watch that, but it's a 45-minute video if you're interested in a very beginner friendly tutorial on the markets and how to just get started with stock market investing. So it goes over 3 different disciplines that we use in the markets, and it also goes over different stock market benchmarks, diversification, asset allocation, a little bit of risk management, compound interest, and some of the basic terms. If you're literally just getting started, highly recommend you guys to check it out. But yeah, I'll make the presentation available to all of our members. Alright, so we're going to cover Amazon and AMD as well in just a second. AMD is pretty much flat, down about 1 basis point. I'm just so confused that NVIDIA is still on this really, really strong move to the upside, up another 1.5% even after the split. And AMD just struggles every single day. So AMC almost exactly at $40 right now. We got Tesla trading at $656. We got NIO actually coming down a little bit, so let's take a quick look. So NIO is actually slightly up, flat on the day so far, up over 36 basis points, and we got AMD up over 24 basis points as well. And this right here, of course, are going to be the markets. The NASDAQ QQQ ETF up over 13 basis points, the SPY also pushing higher, and we've got the Dow Jones pretty much flat on the day. We didn't do a lot of buying, we did a little bit of buying during this dip. Of course, I personally did not sell any stocks, but instead bought a handful of companies for which all the alerts were also sent out. But for the most part, I'm still sitting on pretty sizable amount of cash, right? Plenty of buying power available in case we see a much bigger drop in the markets. So that's something to consider, because I still am sticking to the narrative that we could see a correction, considering the valuations and the prices remain pretty elevated, right? This was kind of like a dip from the NASDAQ and the S&P 500. So if you go back over to our analysis, something that we discussed in our yesterday's market update is kind of like this cheat sheet, how this right here was a 2 to 3% dip from the markets, right? Pullback would have been a 5 to 7% drop, and an 8 to 12% would have been a proper correction for the market, and then anything over 15, anything over 20% would have been an actual bear market and a solid crash for the markets as well. So that's something to consider. Again, the more the markets drop, the bigger the buying sort of becomes, especially for me, the more aggressive I become with the prices, because if it's only dip, I'm not going to be spending a lot of money. It's only a handful of stocks, just buying a little bit. But if you do see a much severe pullback and or a correction, and the more we kind of come down this list, the more I start buying, because the more risk comes down, right? The higher the prices go, the higher the risk goes with it, and it's kind of like the opposite. When prices come down, the risk comes down with it as well. All right, so the NASDAQ really seeing some bids here, so we're pushing higher, up over 24 basis points now, with the SPY up over 7 basis points, and we got the Dow slightly down about 8, and the VIX coming down slightly about 0.5% as well. AMD is really pushing higher, up over 63 basis points, just trading shy of $90, and NIO is now starting to pull back once again. And then Tesla just over $650, so pretty much a neutral, sort of flat kind of day, not really much movement going on. Let's take a quick look at some of the other stocks here. So, all right, AMC down about 2.8%. We got Micron that's also down about 2%. We got SoFi down over 2.2%. But SoFi had a really strong green day yesterday, right? It was up over 9%, I believe. Trading past over $16 once again, but we're seeing a little bit of a pullback once again. So do you expect a correction on the horizon? I do, Dave. That's a great question, but it's almost difficult. It's almost impossible to kind of time it perfectly exactly when we're gonna see those corrections. With the Nasdaq's MACD basically crossing below the signal line, we saw that briefly happen right here. So this is the daily chart on the Nasdaq. You'll notice that we saw a significant drop, right? This was the crossover that we saw from the MACD below the signal line. So we did get a little bit of a dip, but we didn't get a proper pullback or a correction, right? This dip basically got bought up very quickly because, well, for one, there's a lot of money sitting on the sidelines waiting for opportunities to buy in. And perfect validation of that 50 EMA, we also got that gap filled for both the S&P and the Nasdaq. So there were a lot of sort of signals pointing for a potential dip buying opportunity here in a V-shaped recovery. But I still believe that given where the valuations are, given with the uncertainty with inflation, interest rates, and the new variants as well, of course, I mean, it really depends who you're asking. I mean, those can be overblown fears as well, but I wouldn't be surprised if we do get a proper correction in the market sometime this year. It's kind of hard to predict exactly when that's going to happen, but if that happens, I'm ready for it. Yes, Cole, I can take a look at Walgreens here in just a second, but Tesla pushing higher over 660 here. NIO also up over 1%, almost trading past over $47. We got AMD up over 81 basis points, and we got a SoFi that's down over 2.3%, but AMC is pulling back down about 3% right now at the moment. But going back over to our list, we got the yields, the 10-year yields actually dropping a little bit again. The 10-year yields have absolutely getting crushed in the last several weeks, right? The yields have just been coming down aggressively, right? That's basically TLT. That's the bond prices pushing higher, right? So bond prices push higher, yields come down, and that's basically what's been going on for the bond market. It's just signaling a lot of slower economic growth here, with the yields just coming down aggressively and trading at 1.285. So that's an interesting take on the yields here. It just continue to come down. And again, there's a lot of people that think that we're going to probably see 2% for the 10-year yields. So we'll see if that actually does happen. But given where we are trading now, below the 200 SMA, that would be a jump of another 56% for the 10-year yields. And this is correlated with the TLT ETF. This is what we're looking at when we're trying to understand where the yields are going. Because as prices move up, that's what's causing the yields to come back down. So that would be a drop of over 11% for the yields, for the prices to come back down. All right, let's take a quick look on AMD, pushing past over $90. I'm assuming NVIDIA is also flying at the moment. Yep, so NVIDIA is up over 2.5% almost, trading past over $198. So like I said, I mean, the momentum is strong for NVIDIA right now, and it's bouncing off of that 50 EMA. So that can kind of stay overbought for a long time. So I wouldn't be surprised if we do get a retest of 200, over 200, maybe even 205. Or even new all-time highs from NVIDIA stock. So, all right, thank you so much for joining in, everybody. Welcome, good morning. So, all right, NIO is coming down right here. So we're seeing a little bit of selling pressure kick in, and same with Tesla as well. Let's take a quick look on Amazon. So Amazon back over 3,600. We got PayPal that's up. Shopify, look at Shopify hitting a new all-time high on the day. Well, new all-time high for the stock. So $1592.94, almost $1,600 for Shopify. Just breaking out over that resistance. I want to see where Square's trading right now. So Square is also pushing higher, so breaking out over 260, right? That's the target, or that's the resistance that we had. Up another 1%. Both Square and Shopify doing really well in the last 4 days. They've just rallied. And yeah, usually when you wake up to a pre-market that's really red, chances are that it usually gets bought up very quickly. That's what we have seen over the last this entire year for the S&P 500. Most of the times when we've actually gapped down, that dip has almost always been bought up to push back higher. That just goes to show like the resilience of the markets right now and just the appetite for investors, right? They just want to basically own equities and just take any opportunity that they can get as buying opportunities, right? Crocs is pushing higher. Or did they release their earnings today? Yeah, they did. All right, so that's why they're up 40%. Surprise here, but they're up over 12% on the day. That's a pretty significant push. And look at Crocs' pattern. I mean, this is a stock that you want to own. Like this is almost identical to the S&P 500, right? This has just been consistent uptrend. It's not like it's not moving. It's up over 500% in the last year, and just like since April, I mean, this thing is up almost 100%. Like Crocs, it's been on my watch list. Been watching it very, very closely. Haven't had the chance to own it because it hasn't really pulled back. I mean, it's just been going up 91% year to date. Great brand. I mean, just growing revenues, growing margins, and this is on my watch list for so long. But yeah, definitely a strong move from Crocs and getting bought up every time you kind of get that retest from that 50 EMA. All right, let's take a quick look at Mara. I'll go over some of the stocks that you guys are mentioning now. So Mara slightly down about 70 basis points. So we had a breakdown from the right head and shoulders pattern. And of course, this is a crypto play and a Bitcoin play. We actually did send out an alert during this dip for Mara as well. So we actually got in at 21.25. But this right here, again, we'll go ahead and turn this level into a support if we do get a retest down to this $24 level. So 24s all the way as low as like $20. Anything under $20, I'm a buyer of Mara. And of course, if Bitcoin continues to get destroyed here, so I mean, we were trading all the way as low as 30,000, but if we do get another breakdown below 30K, if you breach that level, come down to 20,000 or 25,000, whatever the next level of support is going to be for Bitcoin. Of course, Mara, Coinbase, some of those other Bitcoin-related companies and stocks are obviously going to get hit. At which point, I will be a buyer for those companies as well, for those stocks. So, because I believe, like, I personally do think that there's a future for Bitcoin. There's a price that we're gonna hit, like at least new all-time highs and potentially back up to over, you know, 70, 80, 90, $100,000 for Bitcoin, and that's gonna benefit companies like Mara, Coinbase, some of those stocks as well. So again, this is a Bitcoin longer-term play for me. I'm not taking it as a swing trade, although you can swing trade this. I know that a lot of people on Discord swing traded this, but for me, this is more of a long-term play as opposed to like a swing trade. So thank you so much for that, Fiani. I'm not sure if I mispronounced your name, but thank you so much. I really appreciate it. But yeah, feel free to check out the Patreon link down in the description below. We talk about a lot of different things, including the macro analysis, fundamental analysis, and technicals. Those are like the three things that we'll always cover on the channel. And the whole idea is to never get blindsided by the markets, right? Always be aware and have a good understanding on what's going on with the interest rate, with the labor market, with inflation, with fundamentals of the company, the earnings report, the technicals as well. Technicals are also very important because everything gets priced into the charts. Everything that you're looking at, right? Everything that we know is priced into the charts, the price action. That's what we're trying to understand and analyze, is how the market is pricing in all that information that's out there into the charts, because this again is real people trading real money, real stocks here. So that's what's most important. But yeah, thanks so much for that. So all right, let's take a quick look and Fang, how do you manage your body clock? I live in Singapore and can't stay up all night, though would love to. Yeah, it's kind of tough. I mean, since I moved back, it's just been really difficult. I mean, I wake up at usually 3:30 or 4 in the morning, and then because usually the markets trade here from 7 p.m. till 1:30 in the morning, and usually when there's daylight savings, we actually, whenever we lose or gain an hour, we move back till 2:30 in the morning. So that's even more difficult for me. But nonetheless, I mean, I've just managed it in a way to like do it so that I can do this because I love doing it. So, all right, so Amazon and Apple for the day. Let's talk about Apple. Let's see where it's trading. So up over 60 basis points. We're getting a little bounce back higher from that 145 level. So this right here the support level that we talked about, and the next resistance and the target is going to be 150. Although I do think that Apple, after earnings, I mean, historically that's been kind of like the case. Every time Apple has reported earnings and we've seen a prior run up, this is what's happened for Apple. Like, we're jump over 21%. After the earnings, it has dropped, right? It's happened time and time again, unless we've already been oversold prior to the earnings. If there's a run up pre-earnings, we've seen a pullback and a drop for Apple after earnings. If there's been a sell-off prior to earnings, then we've seen a rally, right? It's kind of like the opposite of the earnings call, right? So, I mean, it's already up 20%. We're trading almost at support near all-time highs again, so I'd be cautious. I'm certainly not buying at these levels. Like, this is not a level that you start a position in Apple stock. This is usually a level where you simply just buy in. Like, if you already have a position in Apple, you just hold, right? You observe the pattern and you just let it be. Like, you don't touch it at these levels. And of course, I'm just waiting for earnings. I mean, Apple is a core long-term position for me, so I'm not really doing anything with it. But 150 is the next target, the next resistance. 145 is a support near term to watch. So Microsoft upgraded from Citi, huh? Up another 1.4%, breaking out over $284. So this right here was a resistance, and we're getting a breakout and a new all-time high for Microsoft. Absolutely. I mean, this is a stock that, had you bought like on these dips, you would have done really, really well. And you know, we talked about Microsoft in the beginning of this year, and how I mentioned that there's two sectors that I think Microsoft is very underappreciated in. It's the cloud and the gaming. Two sectors, cloud and gaming, which I believed Microsoft had a really, really strong potential for growth. I had a price target of 260, believe it or not, 260 at the beginning of this year for Microsoft, and we're like already at 285. The market cap now well over $2 trillion, $2.1 trillion, second biggest company in the United States. So absolutely incredible move we've seen from Microsoft. Any dip, in my opinion, for Microsoft, anything like 5 to 10% plus dip is a buying opportunity, hands down. It's a no-brainer for me. For Microsoft, anything 10% or more, anything we come down to 50 EMA or this higher low at 250 is a no-brainer for Microsoft, in my opinion. So yeah, PE still sits at 38. If you look at so let's take a quick look on the price to earnings. I know in Microsoft, like a lot of these stocks can sometimes be very boring. These are not exciting stocks. Like Microsoft may not be as exciting stock, but it's a moneymaker stock. You buy and hold this, you will come out on top. There's a high probability that you come out on top with this company. And it may be a boring stock, right? Similar to Crocs. Maybe a very boring stock, but it's a moneymaker stock, right? Microsoft 38 PE, right? Forward PE is even lower than that, because when you price in all the growth in the future, the earnings increase, and at current prices, the price earnings even drops even further. So, a huge fan of Microsoft and bullish long term as well on the company. All right, so Shopify we covered, Microsoft we covered. Let's take a quick look on the markets here. So the Nasdaq continues to pump over 34 basis points. And the SPY pretty much flat, and the Dow also trying to recover a little bit. So we got Amazon now over 36.18, and NEO doing what NEO does best after the initial jump, down about 1.4%, and Tesla also coming down to 655. Tesla's support is $650. That's a level that I'm going to be watching very closely, $650. Because if you take a look at the technical analysis here, we're like literally just we're waiting for a move. This is the indecision, right? This is like a lot of indecision happening for Tesla, right? This is the lower highs that we continue to get rejected at, and support aligned with those moving averages sitting at $650 per share. The 50 EMA sits at 649, right? This right here supports 650. Very, very important levels to watch. And then for NEO, the next support is going to be sitting, I believe, close to 4650. So yeah, 4650. Let's see if we actually close above this level or if we close down. So far, we're breaking down below this level, but the day's not over yet. So we'll see if we actually get buyers step in to push past over $46.50 for NEO stock. So that right there is going to be the level to watch intraday. Let's take a quick look on Caterpillar here. So Caterpillar is down slightly, down about 13 basis points. So this right here has been a significant drop for Caterpillar, right? We're just bouncing off of that 200 simple moving average. There was a negative divergence for Caterpillar in the past, so we were forming some type of higher highs, and the lower highs from the relative strength. So this drop that we saw for Caterpillar was justified, right? We were expecting this considering this huge divergence from the price and the relative strength. The MACD crossed below the signal line and then we dropped immediately. The earnings are coming up very, very soon. So considering the fact that we're down so much, down about 14, almost 15% from all-time highs, this may not be the worst trade at this moment, right? Because there's a very low risk to high reward potential for Caterpillar. Because if you were to take a swing trade here, you can set a stop limit right underneath the 200 SMA. You're risking about 3.9, almost 4%. For a potential retest of either the 50 EMA or even potentially a breakout back up to over 235, 236, depending on how they report their earnings and what they announce. That's going to be a jump of another 11% for the stock. So this one is to consider. $215 is going to be a near-term. Actually, I'm going to move that up a little bit. That right there, 219, closer to 220, is going to be a resistance level to watch for Caterpillar. So So Caterpillar, 219, $220 is going to be the resistance level to watch, and the support level all the way as low as 205, also aligned with that 200 SMA. That's the blue line that we have on the chart. All right, let's take a quick look on Palantir for NOLAs. So Palantir coming down. So we have the 200 SMA now starting to form, right? That's the blue line you guys see that's just starting to develop for the price, because now it's been 200 trading days, well, over 200 trading days for Palantir that it's been public and it's been trading. So we've got that line that's being plotted every single day as we develop new prices. So that's going to be very important for us to look at moving forward. There's a resistance at $23 for Palantir. So, I mean, the pattern that we have seen is very clear, right? We saw a rising wedge pattern from this stock, so we were kind of forming in this convergence, and then we saw a breakdown, and right now validated that support at $21. We saw a little bit of a bump higher, and now we're getting rejected at almost that 200 SMA and the $23 resistance again. In my opinion, I don't think that we're going to see a breakdown below 20 again. So I'm thinking it could get to highs of 18. Let's hold my shares at 27. Looking to get back in. I personally don't believe that it's going to come down below $20. I think that $21 got a pretty good support level here, pretty good level of demand. Because if you look at it historically, I mean, that level has validated several times. Now, don't get me wrong, unless there's a broader market correction, that's the only reason, that's the only way I see a lot of support levels getting broken for these stocks. Because last time you'll notice that happened, this was right here, a complete bloodbath for the markets. If you guys remember correctly, it was right around earnings, and there was a lot of selling pressure for the Nasdaq, for the S&P as well. Right around first week of May, we saw a significant drop, and that's also what caused the Palantir stock to break down below $20 right around earnings, come all the way down to $17 before the buyer stepped in. So I personally don't see a breakdown under 21 unless there is a potential correction in the markets. So AJ, so yes, I am anticipating one. It's kind of hard to pinpoint exactly when that's going to happen, which is why I've got a decent amount of cash, roughly about 22% in cash right now. So if you do see a correction, if you do see a pullback, I'm ready for it. But even if we do kind of continue to push higher, that's completely fine with me as well. So it's not like I'm missing out on a lot of gains to the upside, but just prepared for the downside as well. And that's kind of like the best way, in my opinion, to play a market that's continuing to push higher than new all-time highs. You don't want to sit out. You definitely don't want to sit out, because if you miss out the 50 best trading days, you miss out on a lot of gains. So you want to continue to be invested, stay invested in the markets, regardless of what the market is doing, right? We could see in the economy, in the world, we could see like so many different events play out. The markets have just continued, especially in the US, have continued to stay resilient, to push to new all-time highs. So in my opinion, it's best to stay invested, but at the same time, have buying power available, stay a little bit slightly cash heavy to take advantage of those deals when the prices come back down, right? That's the discounted deals that we're always hunting for. So Thomas, what are the reasons for a crash coming? So I want to be very clear. I don't expect a crash. I don't think there's going to be a crash. I just think there's going to be a potential pullback to a correction. Again, going back to our cheat sheet, referring to this, right? This is something that I want you guys to have. Take a screenshot of this, or basically just write it down. Dip is 2 to 3%. Pullback is 5 to 7%. Correction is 8 to 12%, and a crash is 15% or more. So that's why it's very important for us to have this, right, to understand and be clear on where we are with the markets. Right now it's nothing, like we're only down about 1% from all-time highs. When we saw this drop, we were down over 4%, right? So we were somewhere between dip and a pullback, right, for the NASDAQ. This right here, when we saw back in April, we dropped over 8.8%. So that was a proper correction for the NASDAQ, right? Same thing happened in the beginning of March, right? In February, we dropped over 12.7. So that was a proper correction for the markets as well. So I don't like, I don't mean to say that we're going to see a crash, but only a simple pullback and or a correction for the markets. So Jack, those are your definitions or the official? For the most part, I mean, it really depends on what source you're looking at. I mean, I was also thinking like that crash should be over 20%, but anything over 15% I feel like is reasonable to label it as a potential crash, but it really depends on the source that you're looking at. I don't think there's anything official. I think last time I checked, it was somewhere, let me see. Alright, so yeah, so last time I checked, like it was somewhere between 15 and 20%. So I mean, you can put that at 20%, you can put that at 15%, but anything like, you know, north of those numbers is going to be labeled as a crash. But anything below that is going to be a simple dip, pullback, or a correction for the market. So it's not, but again, I mean, I don't want you guys to be fixated on those things to try to time when that's going to happen, because nobody can time that, right? Nobody knows when that's going to happen. It's going to happen when nobody expects it. So in my opinion, stay invested, but be prepared for these when prices move up. Now, obviously, we're not expecting significant downside when we're already down 12-15% from all-time highs, right? That's the time to be buying. So that's when we become more bullish and more aggressive. It's only when we see all-time highs, it's only when the RSI, the MACD hit new all-time highs, overbought levels, and the valuations do get a little bit overextended with the P ratio, the Buffett indicator. You can look at so many different things. That's when I want you guys to stay alert. That's it. That's that I want you guys to be more cautious with your positions and your trades. All right, so let's take a look at different stocks here. So Citrix. Let's take a quick look at CITRIX. All right, CTX. All right, I think we've analyzed the stock in the past because I do have some analysis on this. So looking at the weekly chart, I feel like this right here is or has been the analysis. So we did see a push higher, then we saw a drop all the way down to lows of $112, another push higher, then a sell-off recently as well. So right now we're just hovering over that support, right? So if you look at the 200 SMA, we're like literally just sitting at the 200 SMA right now for this stock, which is sitting at $112. So that right there is going to be the support level in my opinion, at close to $112 per share for this stock. Let's take a quick look at the fundamentals here. So year to date down about 12%. So 34 PE, which is reasonable, 4 times sales, which is also okay. It's not the worst. So they got a lot of debt versus the cash that they have on the balance sheet. Some of the margins here, so current ratio less than 1, so current assets are less than the current liabilities. Gross margin 78%, so I'm assuming they're a software as a service company. Haven't really looked into this company yet, so might have to take a deeper dive. But EBITDA margins at 23% almost. So let me see what they actually do. So design, development, marketing, information, technology solutions. So digital workspace that unifies apps, data, and services. So again, probably a SaaS company here that has high margins. So it really depends. I mean, long term, if you're investing in this for the long term, let me see who has this. So DA Boss, if you're investing in this for the long term, this is a huge discount that you're getting this company at, right? 26% discount, price to earnings, price to sales, really look very reasonable at these valuations. So it's not like it's overvalued. It's not like you're buying at all-time highs. You're buying at support, which is a 200 SMA. You're buying at $112, and you're getting a decent value for your for the company. Now, of course, I don't know what the future projections look like. I don't know what the estimates are, how much they're going to grow their revenue by, what the EPS looks like. So those are all things, those are all due diligence that you need to do on your end. But from a technical standpoint, I can tell you that the 200 SMA, the $112 is a strong support that it's continuously validating. It's just been hovering over that support, and there's a lot of upside as well. Roughly 19-20% if we do retrace back up to $136. That's the lower highs I would watch right here. So lower highs over here, $136. Plenty of upside for the stock, just from a technical standpoint. The RSI, the MACD on the weekly chart, also very, very oversold. So if you do get a bullish crossover, the RSI also starts pushing higher. That's going to be a good momentum to the upside for this stock. All right, let's take a quick look on Apple, Tesla. Let's kind of revisit those stocks. Apple up another 1%. There we go, bouncing off of 145. 150 is going to be the next target and the next resistance here. Shopify up over 1%. Nvidia, look at Nvidia starting to pull back here. So Nvidia with the doji candle so far on the day, it was up over 3%. Now it's up over 80 basis points. That's interesting. Crocs continues to push higher here. And we got Amazon that's up, Square that's up, Visa, Facebook, a lot of big tech is up, Tesla up 30 basis points. Let's take a quick look on the stocks that are red. So Netflix down. Netflix has just been selling off, right? I feel like Netflix, there's opportunity here. There could be, because we already knew that there was, well, I would wait a little bit longer for Netflix. Maybe if it comes down to 475, that's when it's going to become really attractive. This is what's called like a horizontal pattern. This is a horizontal pattern. It's a perfect swing trading pattern. If you want to ever, well, there's two patterns. If you ever want to swing trade, it's either going to be an ascending pattern where you're just consistently following an uptrend from the moving averages and you're buying that dip, similar to what we looked at for Crocs. You'll notice this is an uptrend pattern, right? Ascending pattern. All you're really doing is you're buying at these dips. So that's going to be over here. So every time it kind of retraces back down to that 50 EMA, you're a buyer here, you're a buyer here. You're just buying at those 50 exponential moving average, you're buying here. So you're just buying at those 50 EMA, perfectly validates that level. For Netflix, it's kind of like a horizontal pattern. So it's trading sideways, right? It's range bound. It's not going up. It's been more than a year since it's gone up. It's just trading sideways. So you're literally just buying at support levels here. So that right there is a support here. This right here is also a support for Netflix. So that's why I'm waiting. If it comes down to 475, 486, I think there's going to be plenty of opportunity for Netflix to then potentially retrace back up to this level at 557, 575, hence representing, I believe that's a 20% gain, because I have swing traded this before. So that's going to be roughly 19.5% for Netflix, right? So that's going to be roughly 20%. That's a great swing trading setup, because your stop limit is so low. Like you're risking only at 475. Your stop limit's going to be probably under 465. You're only risking 2.5% for a potential reversal back up to 20%. So that's almost a 10-to-1 trade that you're taking. And of course, it's going to breach sometime. It's going to breach briefly down to that level. So you want to make sure that you don't have like hard stop losses, because a lot of times when you're putting in hard stop losses, they get pulled out, right? How often does it happen that you have a stop loss in place or a stop limit in place and you get pulled out and the stock continues to move in the direction that you anticipated, right? That's why it's important to have mental stops and then let the candles close on the daily chart to basically see if you're going to see a breakdown or not. In this case, we did breach intraday, but then we quickly reverted back up to that support and then recovered, pushed higher. So all right, let's take a quick look at CCIV and see where that's trading, up over 1.3%. We'll quickly go over some of the EV stocks here, but CCIV had kind of like this rising wedge pattern, which didn't quite fill completely, and then we saw a breakdown before that, so we dropped about 23%. Right now, we're just kind of hovering in between these two levels that I'm watching, $21, $27. Those right there are going to be support and resistance levels to watch. So $21 support and the resistance at $27 per share. All right, let's talk to, all right, so BMG Mark, yes, you're right. So I was expecting Square to drop down to 200. I still think that the valuation is pretty high for this. Both Square and Shopify, I still think that the valuation is pretty high. So you're paying a bit of a premium here, considering that PE is 346. Price of sales almost 10. So yes, I still think that valuation's high, and of course I'm not touching Square at 260. I'm not touching Shopify at 1600 because I think those two stocks are overpriced. So if you do see a much bigger pullback down to 200, that's when I'm gonna really start considering Square and start buying at those levels. All right, so let's take a quick look at Cole mentioned, so Corsair. So Corsair Gaming, we've already done a fundamental analysis on the stock, under $30, under $29. Great value for this company at these levels. I mean, based on my assumptions and the estimates that I showed you guys, if you guys did get a chance to watch that video, simply based on EBITDA multiples, this stock is priced at $75. I think price to sales was roughly around $78 if I'm not mistaken, the price that I had. And this is far out. This is 2025. This is not like tomorrow or like next year. This is 5 years out based on the revenue projections that I have, the growth estimates that I also have for the company. So that's my estimate on the stock, is at $75, closer to that level, and that's going to be an annualized rate of return of roughly 16 to 18%. I'll have to go back and recheck my math, but that was roughly between 16 and 18% for the stock. So I think there's great value for Corsair Gaming at these levels, considering that we're down so much from our all-time highs. Forward PE now sits under like 18 or 16, like that's a ridiculously cheap valuation, and we're down over 40%. So there's deals in the market. It's not like there's nothing to buy. There's plenty of deals that we can grab onto, right? Considering that a lot of other stocks are hitting new all-time highs and continue to push higher. So yeah, Corsair, I'd be watching at $28, $29. I think there's a lot of value there in that stock for the long term. All right, let's take a quick look at Roblox, see where that's trading at. So Roblox is following this descending triangle. We did get a breakdown from this, and now we're trading below the 50 exponential moving average as well. So in my opinion, there is going to be some struggle here at the 50 EMA, considering that we were validating that support here once, twice, and then we broke down eventually from this descending triangle. This right here are going to be some of the resistance levels to watch. So if you do get a retest, push higher, $89 is going to be the first level to watch, all the way as high as $93 per share, right? That resistance kind of aligned with this previous resistance, perfectly got validated today, and then we're seeing a breakdown even further. So $81 is going to either be kind of like a resistance here because we got rejected in the past, but if you do see a breakout over that level today, then it's going to turn into a support moving forward. But the 50 EMA is going to be very important to watch at $83. That right there is going to be a resistance level. All right, let's take a quick look at Skills, SKLZ. So Skills has had a downtrending pattern here for a long time. So we were selling off here, we got a spike, and then we sold off even further, lower highs and lower lows being formed. So I think there's a stronger support at closer to $12.45. So that right there is going to be a level, but right now we just continue to trade inside this lower highs and lower lows. We're trading below the moving averages, so in my opinion, that there is going to be some range-bound pattern for Skills. And for it to kind of revert trend and start pushing higher, I mean, the RSI and the MACD are both very, very oversold, and the earnings are also coming up. So there's a high probability that we see more upside for Skills, but it's just struggling to catch a break, right? The volume is no longer near to as what it was previously, so it's kind of a hard stock to trade, right? It's just continue to fades every time we see those moves, right? So this right here was a jump of 69%, and then quickly within a few days dropped over 36%, back down exactly where we were. This right here, almost same thing. We jumped over 90%, and then in the last few weeks we're down 43%. So it's kind of a hard stock to trade, just trades back and forth between those moving averages. All right, so quick update on the markets here. So we are up over 36 basis points for the NASDAQ. SPY is actually down over 6 basis points, and we got the Dow Jones that is also down roughly 28 basis points. So the value stocks really taking a little bit of a pullback here. So Path. I know that Kathy Wood is pretty heavy on Path. She's just been buying this stock like there's no tomorrow. Let's take a quick headline news. So venture capital firm, nothing there. This is on June 9th. Impressive Q1 results for Path. So adjusted EPS of 2 cents, swinging from an adjusted loss of 9 cents per share a year earlier. Analysts polled at a loss of 5 cents, so they came in above average. Revenue was 186.2 million, up 113 million from a year ago. But I know that Kathy Wood has been buying the stock a lot, and yeah, this is definitely coming down to a reasonable level. But this is still, in my opinion, just based on simple price to sales earnings ratios, it's still pretty high. 46 times sales. If you're trading at 46 times sales, that is a high valuation. Now, of course, I don't want to discredit the growth, because they may have a lot of growth in the future, but just the valuation for me is a little bit high unless I do those forecasts and really understand where the revenues are going to be, where the EBITDA earnings and all those different things are going to be in the future. Can't really make a sound decision on this stock right now. All right, let's take a quick look at what was I looking at? ChargePoint. So ChargePoint did get a perfect bounce higher from this support level at the $22 level. So I'm watching two support levels for this stock if we do get a retest. So the first one is at closer to $22.30, but if it comes down to $19.70, closer to $19, I think that's going to be a great deal for ChargePoint, considering the infrastructure bill, the EV adoption, the charging stations that they're going to be working with all around the world, not just in the US. I think ChargePoint has a lot of potential for growth in the future as well. But just looking at the valuation, so 136 times sales, right? That's a pretty significant number. That's a very, very high number. Price to sales at 130, that's a lot. So yeah, I mean, valuations in the EV sector can be debatable. They are debatable, that whether they're appropriate for this new industry or the EV adoption, or whether they're high. But of course, everyone's gonna have their opinions on what the future looks like. But in my opinion, ChargePoint as a swing trade, if it comes down to $22 or even as low as $19, is going to be a very similar situation to Netflix, right? Horizontal pattern. It's just been validating that support several times in the past. I think there's going to be a much better opportunity once it comes down to those levels. So down about 2.7% today. But a lot of EV stocks are down. So NIO, Li Auto, XPeng, after the rally that we saw yesterday, they are pulling back slightly. With Tesla simply hovering over 650, pretty much flat as it can get for the market cap it has. But CCIV up, XL Fleet is up, BYD, Toyota are also up on the day. All right, so this right here is AMD. Look at that selling pressure coming in, right? Pulling back substantially after the first 10 minutes. This is going to be Amazon pushing higher, 36.16, still off the all-time highs pretty nicely. So all-time highs sit well over 37.75. My target is at $4,000, and Tesla slightly up over 650. So let's take a look at Facebook here. So Facebook up over 24. I want to take a look at Google. So Google up another 33 basis points. This stock is on a complete roar. Hasn't had a proper pullback, I should say. Like, it has seen some corrections here, so down about 9%, but just continuing to kind of fill in these gaps here, filling the rising wedge, continuing to push up. Year to date, this stock is up over 52%. Right, and that's the simplicity of the markets, right? You don't need to be right on 100 different stocks. You only need you only need to pick a handful of stocks that you understand the business, and you can really just buy and hold those companies. Like, if you would have just bought and hold Google, that's it, in your portfolio this year, you would have come out on top with the S&P and majority of the markets that have seen all this volatility. You would have just been sitting on the sidelines, just enjoying the 52% gains year to date. So that's like the simplicity in a nutshell, the markets and really how they perform, is like just trying to understand businesses for a few companies and just buying and holding really solid companies over the long term. All right, let's take a look at Oracle. I haven't really looked into Oracle, I don't think at all. Maybe back in the day here, but this right here was a kind of like a ascending pattern. So higher highs, higher lows, as we continue to kind of validate these levels here. And this right here, huge breakout. So pushing higher. So we left this gap for Oracle here that we kind of filled immediately. So for Oracle, let's take a look. Pratik, are you looking for like a swing trade or like a long-term investment? What are you looking to do here with Oracle? Because the RSI, the MACD is overbought. Of course, RSI trading well over 70 levels. The MACD has just been aggressively pushing higher. It's up another 1% today. In the last like 4 to 5 weeks, it's up almost 19-20%. So am I going to be buying at these levels? No. But does it have a lot of potential in the future? Well, we'll have to take a look at the fundamentals here. So growing revenues, growing margins for the company. And these are again some rough estimates, right? We need to dig in a lot deeper to understand where the earnings are, where the EBITDA is, what the free cash flow is for the company. So this is like when I'm doing these fundamental analysis, these are very quick estimates, rough sort of screening for the company to understand whether we're getting good value or not for the stock. Because at the end of the day, what we're really buying is a company, right? We're not just buying like tickers on a screen or like just a number. We're actually buying company, whether it's swing trading or it's long-term investing. The company comes first, valuations always come first, and then we look at the charts and the technicals. But 19's PE for Oracle, which is again a software as a service company, I think it's a very low. 6 times sales is also very reasonable. The margins you'll notice is at 78% gross margins, EBITDA margins well over 48%, so that's very strong. Balance sheet doesn't look too healthy. So they've got plenty of debt, 87 billion debt versus 46 billion in cash, so almost twice as much as debt. So cash from operations is going to be roughly at 4.8 billion. It's kind of hard to see that color from TradingView. But anyway, so let's take a look at what the EBITDA is for the company. So diluted EPS at 457, EBITDA is at $18.7 billion. It's kind of hard for me to calculate the enterprise value here, but it seems like it's got a reasonable valuation, but just the balance sheet is a little bit something that we need to look into further. But technically, it's a little bit overbought, so I would not be buying at these levels. So long-term investment. Okay, so long-term, I would wait for a pullback to see if it corrects, maybe down to that 50 EMA, maybe down to like $78, $75 level, 14% discount from its all-time highs right now, would be like a sweet spot to at least get started. All right, so here we are with these stocks. Let's take a quick look on AMC, where that's trading. AMC down roughly 5%, trading under $39 right now. There is a support for AMC at close to, well, it's at $40. So we'll see if that level actually does get validated again here. So I would watch that $40 level for AMC stock, right? See if he can actually break out over that level intraday, or if he basically sell off even further. So Airbnb coming down about 90 basis points. So let's take a quick look on Airbnb here. By the way, this right here is the put call ratio I wanted to go over. I mean, this is something that we have covered, gosh, like a few months ago. Like this was something that we used to cover on the channel, but just kind of bringing this back. And I'll also be bringing back like a lot of PowerPoint presentations as well, kind of like educational videos for you guys instead of just only market updates. I think that would be very valuable as well. But this really represents the put options versus call options in the markets. So as this thing comes, as it was over just literally July 19th and 20th, there were more people expecting a pullback, right? So they were protecting their portfolios and hedging against a potential pullback, which we did see one. And once we did, this really dropped significantly, right? That just goes to show that a lot of people close out of their put options or put positions to basically take advantage of that pullback that we saw. Now that being said, if it gets closer to like 0.6, 0.5, that just goes to show that there aren't as many bearish bets on the market as there are bullish bets right now. But if we get too low, that would just represent that, you know, a lot of people are optimistic about the markets. A lot of people are very bullish on the markets because there are more call options and there are put options on the market. So that would be also a time to be a little bit cautious and be alert that we are seeing kind of like greed in the markets to an extreme. And this can be seen as more of a fear in the markets as well. So, you know, then we saw a drop and then this ratio also dropped down. So that's something to consider as well. So, all right, let's take a quick look on Airbnb here. So Airbnb basically continued to pull back below the moving averages, below this resistance right here. We got a failed breakout, right? Couple times we tried to break out over that 50 EMA, but then the pattern rolled over, right? Not just once, but like twice, 3 times here. Traded all the way to as a 157, but then we sold off even further. And of course, with the new Delta variant issues in Europe and parts of North America as well, there's no surprise that this stock is actually down over 18%. From highs of 156. But Airbnb is now testing a very strong support, so we bounced off of that level. We pushed up 8.47%, but it's now starting to come back even further. This right here also is or can be seen some type of a head and shoulders. So really, I mean, what we're looking at here is a potential left shoulder here, a head, and a right shoulder. If we see a breakdown below this neckline, which is sitting roughly at $130, I can tell you there's going to be massive opportunity for Airbnb if it comes all the way down under 110, 109, $105, like some of those levels that it hasn't really tested since IPO. But for the most part, for the time being, right now, I would watch this level at close to $130. So that right there is going to be the level to watch, all the way as low as wherever we break down to, if we see a breakdown. But again, earnings are also coming up in September, it looks like. So 130 is going to be the first level of support I would watch for Airbnb, and the resistance is going to stay put at close to this 152 level. So $150 we're continuously just getting validated and rejected at that level. Alright, so the NASDAQ doing really well today, up over 41 basis points, so continue to push higher with a lot of tech stocks pushing up. Crocs pulling back a little bit, but Shopify almost at 1600, Apple breaking out over 147 now. Amazon at 3617. We got Nvidia pulling back a little bit. Where's AMD? AMD up over 33 basis points. That's it. Tesla up over 28 basis points. Pinterest and Vertex Pharmaceutical pulling back slightly. DraftKings is down. Coinbase is down 1.5%. NEO's pulling back over 1%, which is fine. NEO 1% is not a big deal, right? 1% is normal. But what we really want to see is that we want to see a close above $46.50 for NEO. All right, let's take a quick look at EARS, E-A-R-S. All right, it's kind of a... So this is a really low volume stock. And especially for a penny stock, this is a very low volume stock. So I personally would stay away from this, and it's a very low market cap as well. It's like 42 million. It's a very micro cap, low volume, low liquidity stock. So in my opinion, this is something that I would stay away from because it's had this spike and it kind of pulled back. But just a very rough technical breakdown here. There's a support here at close to 275. The 200 SMA is there. We've gotten perfect validation here. At those levels here, so perfect support at $2.75, and of course we've had every time we've seen those spikes, there's been a lot of profit taking, and the pattern kind of rolls over and fades with very low volume. So micro cap, low volume, low liquidity, so not something that I'm going to be interested in or would probably just stay away from, in my opinion. All right, so let's take a look at AVPT. AvePoint. Alright, so it's up 2.89% today, but a steep drop from its all-time highs. So there was probably some type of a negative divergence here. So there was a bearish divergence on the pattern back when it was trading on November and in December of 2020, right? So you'll notice that the prices actually continue to make higher highs. But this right here was actually a drop in the relative strength, right? We were seeing a drop, hence the bearish divergence, the negative divergence. So this right here, a drop of 42%, was pretty expected. In other words, that there was a negative divergence, but of course the drop that we're seeing could have been kind of the stock getting caught up during the February-March sell-off, the May sell-off as well. Then we found some type of a support, but this is also a really low volume stock in my opinion. Like 1.2 million for like an $11 stock or like $9 stock is quite low, right? So there's not really a lot of movement, but the support I would watch for this one, is going to be closer to like $10. So Noah says I picked up AVPT under 10. So yeah, $10 is going to be a strong support here for this stock. We're approaching some type of a resistance. Close to the 200 SMA and 1238. So you'll notice that we got rejected here in the past perfectly over here. We got rejected here as well. So a couple times we've perfectly gotten rejected at this very level at $12.40, 1238, and we got the 200 SMA sitting right over there. So that right there is going to be the level to watch, in my opinion. The MACD is crossing over the signal line. The RSI is also pushing higher, so there could be some more upside left in the tank for the stock. And 1238, that's going to be a jump of another 5.5% for the stock. All right, let's take a quick look at the VIX. So VIX is pretty much down about 11 basis points. So cryptos, Bitcoin is bouncing off that $30,000 level. So we're still pushing higher from that support here. 42,000 is still the resistance. Ethereum is still getting rejected at that resistance, right? So we're still getting a rejection from that 200 SMA and the resistance at 2,050 levels. Support level that we bounced off of was 1715, right? That's the level that we talked about in our previous updates. So the patterns still look bearish from like a bigger sort of like a grand scheme of things. Like right now it still looks weak, trading below the moving averages. If you look at the broader time frames like daily and weekly charts, we're still trading below the 50 SMA here and the 200 SMA. So that right there was a death cross for Bitcoin, and since that death cross has happened, we've actually dropped 22%. So I would watch those support resistance levels, and if we do get another breakdown, which according to like this big massive head and shoulders pattern here, that does suggest that we're potentially going to see one. But still, long-term outlook on Bitcoin, for me at least, still remains bullish. That I think there's a place for Bitcoin in the future, but we're just gonna have to figure out exactly how that fits into the entire ecosystem of the financial services industry, fintech, and a lot of other things as well. Alright, so let's take a quick look on the brief look on the markets here. So Upstart down, Mara is also down roughly. Palantir, so Palantir, $22 coming down aggressively after that 200 SMA, right? $23 is the first resistance level that we need to watch out for Palantir. Alright guys, so I'm actually going to end the live stream here. I'm going to spend some time with our Discord members now because I need to send some alerts, because we will be potentially doing some buying this week if we do get some more deals for a lot of these companies. Mostly watching Corsair Gaming for the most part today, Upstart and Mara, and potentially Palantir if it comes down even further. But thank you so much for joining in. We'll be sending out a lot of different market updates and answering your questions as well over at our Discord if you're part of it. If you're not, make sure that you check out the Webull and the Patreon link more specifically down in the description below. We got limited spots available for the month of July. I know, shameless plug, but it's always beneficial if you are part of our community. You'll get access to a lot of different benefits as well, including research, analysis, Excel spreadsheets, so on and so forth. So thank you so much for joining in. I really appreciate you guys' support. I hope this was helpful. We will be doing a lot of fundamental technical analysis on your stocks in our future live streams as well. But thank you so much for spending your time, your morning, evening, wherever you guys are watching from. I hope you guys have a great green day as well. As always, happy investing. I will see you guys in the next live stream.